All right, good afternoon. This is Ralph Mendez. So this is going to finish up chapter 3, and we're going to do problems. We're going to do problems 12. I'm sorry, 13, 14, 15, 16. So let's see what we can do now. So they're asking you to make these adjustments right here, A, B, C, D, E, F, G, H. They're adjustments. So now let's start here. An analysis of withdrawals insurance policy shows 2,700 is expired. If insurance is expired, that means it's become an expense. So what was it? Let's just take a look at what it was. Now, I'm really glad to have this ledger here because I haven't taught you the ledger. This is a 3-column ledger. It just has the balance in the last. And I've been teaching you T accounts because that's what UTSA and TAMUSA. Now, if you'll notice, insurance. So they have prepaid insurance right here, 13,500. And of the 13,500, 2,700 is gone. It's expired. It's become an expense. And that's the journal entry you have to make here. Insurance expense, prepaid insurance. Okay. Number 2, an inventory account shows that teaching supplies costing $37.60 are available at year end. So that means, Ralph, go count the inventory. It's New Year's Eve. Come on, let's go. Won't be able to go party until we count them. I go in there and I come back and say, there's 3,760 left of inventory. Well, how much did we have? Well, if you look at the ledger, you had teaching supplies of 9,000. So the difference is gone. So that's your journal entry. So we need an entry for what we had, 9,200, minus what I counted, 3,760, and the difference of 5,440 is gone. And that's your journal entry. Now, to be honest with you, I bet it's on the trial balance too, that number. Watch. Training supplies are right now 9,200. That's also in the ledger. And then watch after we make the journal entry. Hey, what happened? Where's my journal entry? Okay, number 2. So training supplies are going down. Training supplies. What they call it? Oh, teaching supplies. Sorry. Teaching supplies expense. Teaching supplies, the assets going down. 54. Oh. And watch now. So right here it says they're available for the next period. So hopefully, because it posted, there it is. It had 9,200. I just made the journal entry, and there's the right amount. That also will be the right amount over here in the ledger. See? So you made your adjustment, and it reflects now the real world, the truth. So that's all adjustments do. They fix things. They record events, what actually happened. Go back here. Letter C. Annual depreciation of equipment is 4,800. Depreciation equipment of what? Equipment is 4,800. And accumulated depreciation of the equipment is, there you go. Annual depreciation of professional of the library, 9,000. Depreciation expense, professional library, accumulated. There you go. Number 5, they do a 6-month course starting immediately. The contract calls for a monthly fee of $3,200 and the client paid for 5 months. So they already gave us 5 months. 5 months times 15, 3,200 is 15. That's $16,000. And they gave it to us on November the 1st. So this is on New Year's Eve, December 31st, when the cash received. The unearned training fees account was credited. So now unearned is debited because you've earned part of it, and it becomes training fees earned. And how much is it? Well, how many months have you earned by the year end? By December 31st, how many months of the 6 months have you earned? 2, November and December. So, okay. All right. So number 6, you earned 2 months. On October 15th, withdrawals agreed to teach a 4-month class beginning immediately for an executive due at the end of the class. At December 31st, 3,600 of the tuition has been earned. So they didn't give you any money in advance. It's just from October by December, this person owes you $3,600. So it's an accrued revenue they owe you. So it's an accounts receivable. You're going to receive because tuition fees earned. You've earned it and you're billing the person. Withdrawals to employees are paid weekly. At the end of the year, 2 days' salaries have accrued at the rate of 180 per day per person. So each day, each person gets 180 and the other person gets 180. So that's 360 per day. And how many days is it? 2 days. So 360 times 2 is 720. What accounts? Well, wage expense. Wrong number. I bet it wants salaries. Salaries expense and then salaries payable. There you go. Number 8. The balance in the prepaid rent account represents rent for December. So I go, well, how much is in the prepaid rent? Prepaid rent, 3,600. And if we go here, the trial balance has prepaid rent of 3,600 and it's all gone. So it needs to be all gone, it said. So now got to go back here and you got to put that 3,600. See, they don't tell us the amount. So you got to go look up what the amount was. It's 3,600 and that prepaid has gone away, the prepaid rent, and it's now rent expense. There you go. So let's just say we want to check my work. Okay, the trouble is, if you only did 5 entries instead of 8, it would still show everything correct. It wouldn't tell you you've missed the other one. So be careful. It won't tell you that you missed it. Now look, in the midterm, I'm having you do all these journal posting yourself because I want you to understand what the computer does. In the real world, those journal entries have all been posted to Ledger and they all have updated the new accounts. Now, what I don't like about this problem is y'all are not going to solve it exactly because it doesn't show the balance. It's got a mistake in it somewhere. Okay, the income statement. So now you have to put, if you put in the name of the account, then it will bring over the numbers. So what's the matter? Come on. Let me work. What's the matter? Return to the question. Oh, I guess I wasn't there. So I got to go to the income statement and please put in what accounts are on there. Revenue is on here and expenses are on here. So now enter your revenue. You have tuition fees earned and training fees earned. You got 2 of them and see how it brought over the number. Now, how many expenses do we have? That's how we check this. Trial balance down here, all the expenses at the very end. 1, 2, 3, 4, 5, 6, 7, 8. So you need to bring in 8 expenses. So bring in 8 expenses. So look, all you got, if you scroll down, all the expenses are going to be together. They're right after the revenue. So there is account 612, 616, 622, 637, 640, 652, 660, 690. 1, 2, 3, 4, 5, 6, 7, 8. We brought over 8 expenses. Revenue minus expenses is net income. Go to the retained earnings. It already did it for you. Beginning retained earnings plus the income minus the dividends. It did it for you. Go to the balance sheet. Now here you have to put in the assets. Well, how many assets are there? Where would I look for them? The ledger, I can find the assets, but it's easier to see them on balances. Trial balance. I'm going to put the adjusted one, not the unadjusted. How many assets? 1, 2, 3, 4, 5. 5 assets. How many liabilities? 1, 2, 3. 3 liabilities. 3 liabilities. 5 assets. They're at the top. 101, 106, 126, 128, 130. Now down here, these are long-term assets, longer than a year. That's your library and your equipment. Oh, but what mistake did I make? No, right here. Under library, you need to put the accumulated depreciation for the library. In here, you need to put your equipment in the accumulated depreciation for the equipment. Okay, so there it is. Professional library, less what we recovered through depreciation. It has a book value of 18. We paid 48,000 for the equipment. We've depreciated 14.4. We still have 33,600 as the book value, or that much more to depreciate. The two plant assets are 51. The current assets are 93. So now I got to match that number. We had three liabilities: accounts payable, salaries payable, unearned training fees, equity. It has common stock, but I don't think it had anything in there. And now I got to bring over the retained earnings. All right. And I'm not going to worry about balancing because the problem is messed up. I already tried it one time and I couldn't find the numbers to balance. So this number has a mistake in it somewhere. It's missing something. All right. All right. So now we go to impact on income. So what they're asking you is, for each adjustment, indicate the income statement, the balance sheet account affected, and the impact. Well, what impacts income? Revenue and expenses. If you forget an income, if you forget a revenue, you have a negative number. I mean, and if you forget an expense, you have too much income. So now insurance. So here on the balance sheet is prepaid insurance, right? Where'd you go? Prepaid insurance. Teaching supplies. It's an asset. So, and over here it's accumulated. And here it's accumulated. So these are all the balance sheet. So here it's the unearned amount. Unearned training. Do we have any unearned tuition? We don't got any. I don't understand why there's no unearned tuition there. No unearned? I don't understand that. And over here, it's salaries payable. And over here, it's prepaid rent. So these are all the balance sheet accounts. All balance sheet accounts. But what's on the income statement? Prepaid insurance becomes insurance expense. Prepaid rent becomes rent expense. Teaching supplies becomes teaching supplies expense. Accumulated depreciation is just depreciation expense for the library and that. Unearned training fees become training fees earned. And tuition becomes tuition fees earned. But I don't understand why it doesn't. I don't see an unearned tuition. Let's look. I got to look for the liabilities. See, there is no unearned tuition. So anyway, maybe I'll miss that one. And then salaries payable is the other side of salaries expense. Where are you at? Net impact. So if you forget these things, so now you have to go back and you got to see how much they were. So I'm going to go to the income statement. How much was my insurance expense? 2,700. So 2,700. So that made it go down. How much was my teaching supplies expense? 5,440. How much was my depreciation? How much was my depreciation for my equipment and the library? Depreciation equipment was 4,800 and 9,000. Minus 4,800 minus 9,000. How much was my training fees? Training fees earned. Training fees. Training fees were 50,400 and 135,600. Now, these are positive impact because revenue makes it go up and expenses make your income go down. How much was salaries expense? 51,320. And my rent expense, last one, rent expense, where are you? Minus 43,200. All right, so let's see. It's probably not. So net income before adjustments. Oh, so to get the net income before adjustments, it was right here, 72,750. 72,750. And then we made all the adjustments. So I go back to my income statement and I click up here for adjusted, and it was 56,490. 56,490. So the expenses, had the adjustments not been prepared, income would have been overstated. Oh, that's interesting. Let's just check our work. Unearned training fees. Didn't like the number. Unearned training fees. Unearned training fees. See, I told you I didn't like it, but I didn't see an option. All right, then. Okay, so let's just, out of curiosity, the balance sheet right? Balance sheet's right. How about retained earnings? How about income statement? Trial balance, ledger, in our general journal is all right. So the impact here, let's just see what it's saying it didn't like. Unearned training fees, they become training fees earned. So they're saying the account's right. So training fees earned. Training fees earned, 50,400, and I have the right number. And unearned training fees, tuition, I have 135.6. 135.6. So salaries payable, salaries expense, 51,320. 51,320. So it says I have the right counts, but so that's why, I don't know, this problem's a bit of an issue. I should have deleted it, but I can't delete it once students start on it. All right, let's go on to number 14. So it's just a few little things in that problem don't seem right to me. I don't see anything wrong with the work I did, and yet it doesn't give me a balance. Number 14. So here's an extension. So you have to do the same thing again. April 2nd, the company prepaid 11,400 cash for 12 months of rent. Prepare the entry. So on April 2nd, it repaid. So at the end of the year, December 31st, how many months are gone? April, May, June, July, August, September, October, November, December. 9 months. So take 11,400 divided by 12 equals 950 times how many months? April, May, June, July, August, September, October, November, December. 9 times 9. So 8,550. So prepaid rent and rent expense. Wrong way. Rent expense, prepaid rent. It's going down. And that's what it was, right? The company 12 months of office space. And how much is gone? 8,550. 8,550. 8,550. Prepaid rent is gone. Okay, number 2. The balance in the prepaid insurance represents the premium paid for 12 months. The policy's coverage began on April the 1st. Prepare the required journal entry. So how much do I have of prepaid insurance? Well, they don't know. So you got to go look either in the trial balance, 3360, general ledger, prepaid insurance, 3360. But it's for 12 months. 3360 divided by 12 is equal to 280 a month. How many months from April to the end of the year? April, May, June, July, August, September, October, November, December, times 9. So 2520 is what's gone. 2520. And what is this for? Insurance. So insurance expense, prepaid insurance. Okay, y'all starting to get the idea? All right, office supplies on hand, total 1,900. Prepare the required journal entries. So on April the 30th, in its first month of operation, this is its first month. So I guess I'm wrong. Maybe it's just description on that require adjustments for April 30th. Here I'm doing 12 months and it's only once 1 month. It only wants 1 month. So 11,400 divided by 12. So it's just 950. 950. Number 2. Prepaid insurance. Prepaid insurance, 3360. For how many months is that? 3360. Just divide that by 12. It's 280. So I think it should just be 280 here. Okay, let's see if I'm on the right track for having yeah, it's just a month, and I was trying to do till the end of the year. Okay. All right, so let's go back to the general journal. So very good. So it's just 1 month they want. So now, view the journal entries. So it's 1 month. Number 3, office supplies on hand is of April 30th till 1900. Well, how much office supplies do we have? 1900. You have office supplies of 6,800 minus 1900 we counted. So the difference is the expense. So 1900 is the expense. And it's supplies become an expense. Supplies expense. And office supplies is going down. There we go. Number 4, straight line appreciation based on a 5-year is 575 per month. We only are doing 1 month. And what is it? Depreciation expense for what? Of the office equipment. There you go. No, it's depreciation expense. And it's accumulated. All right. Number 6, the company has completed work for a client, but it's not yet billed. So you need to bill them. So how do you bill somebody when they owe you $2,400? How do you say it in accounting? It's accounts receivable, and it's for your revenue, whatever your revenue you use. There it is, service revenue. Okay, wages due to employees, but not yet paid as of April 30th, total 2,900. So it's given us the amount of the wages payable. So you go wages payable, and it's wage expense. So it's in April. Even though you don't pay them until May, you put the amount in April, it belongs in April, and you put it as a liability. So we check our work. 1, 2, 3, 4, 5, 6. And it doesn't like the office supplies expense. So let's go back to number 3. The office supplies on hand is of April 3rd. Put 1,900. And see, I used the 1,900, and that's not the right amount. That's what's still on hand. So I've got to go check, well, how much was on hand? Number 3, they total 1,900. Well, how much did you have? 4,900, but you got to go to the ledger and see if it's already been subtracted. So yes, so you got to go back. It was 6,800, and it says there's only 1,900 left. So I take 6,800 minus 1,900 left. So we've used 4,900. So this needs to change to 4,900. See? So I put the ending amount, and it should be how much is gone. All right. So let's check my work again. Okay, it likes everything. It already updated the ledger. Way in real life, it already updated trial balance. And again, on the midterm, I maybe do all this by hand because I don't think you'll understand what's going on unless you do it by hand once. Income statement. Well, you've got to put what the revenue is. So you don't do anything for those two, but now here you got to put in what's the revenue account. Well, scroll down. What's your revenue? Service revenue, and it brought over the number. How many expenses are there? 1, 2, 3, 4, 5, 6. You need to bring in 6 expenses. Okay, so how do you tell what they are? Well, right here, rent expense 501, 502 insurance, 503, 505, 510, and 690. Are there any more? Anything Bass? No. So see what you put in the expenses? Rent. Oh, see, but I have utilities twice, so I got to get rid of that. How do I get rid of it now? There we go. Rent, insurance, office supplies, wage, distant. 1, 2, 3, 4, 5, 6. There you go. And then you go to retained earnings. It does it for you. And the balance sheet. Oh, you got to put in, well, how many assets are there? Trial balance. How many assets? 1, 2, 3, 4, 5, 5 current, and then 1 long term. 5 current and 1 long term. 5 current assets. Cash, receivables, office supplies, prepaid insurance, prepaid rent, and then 1 long term. Where's it at? Office equipment. But less the accumulated. Got to take less. So there's the balance we have to try to match to. We have 3 liabilities. Accounts payable, wages payable. We got missing something else here. Accounts payable, wage payable. Well, is it possible we only have 2? All right, well, we'll see. Okay, how about down here under equity? Well, you have common stock and retained earnings. I think that's what the other problem lacked. Remember the ones I told you didn't balance? It had no number over there. Common stock, retained earnings. Do we balance? Yes. And see, a minute ago, the common stock had no balance, and that's why I think they had a mistake. All right, so now here, impact. Y'all know what to do here. Rent expense, prepaid rent. Insurance expense, prepaid insurance. Supplies expense, supplies, prepaid supplies. Depreciation expense, accumulated. Unbilled fees. Well, unbilled means that's an accounts receivable, and over here it's revenue. Unpaid wages, wage expense, wage payable. So y'all should be able to figure that one out. We did 13, even though we didn't balance. That should be 14. So let's go on to number 15 here. So identify adjusting entries with explanations. So in this case, remember, deferrals stands for dollar. Either you paid somebody or somebody paid you, and money's already changed hands. And accruals mean you owe or somebody owes you. So D is for dollar. You paid somebody or somebody paid you in advance. And accrual means you owe somebody or somebody owes you. So here, salary expense, salary payable. So no money's changed hands here. So what is that? You owe somebody. So this is a accrued expense. Well, what is an accrued expense? I think it's letter E. Okay, how much is this? No money has changed hands here. You're going to receive interest and it's revenue. So somebody owes you. So that's an accrued revenue. Somebody owes you. So that's letter F. Cash, accounts receivable from consulting. So this means you're collecting cash from consulting. So I just think I'm not sure it's just recorded periods earnings of prior earned revenue. No, to record receipt of an accrued, to record this use period prepaid. So accounts receivable from consulting. So what happened is you billed somebody in the past, like last week, and now they paid you because you had a receivable and the receivable's going away. So to record receipt of unearned prior. So to record payment of an accrued revenue. So it's letter D. So somebody owed you in the past and now you're recording the fact that you got paid. Cash, unearned professional fees. So money changed hands. It was unearned before. Oh no, this is where you're actually recording getting money in advance, right? You're receiving cash and it's unearned. So what is that? Letter A, record receipt of unearned revenue. So that's like letter A. You haven't earned it yet and you're getting money. That's cash interest receivable. Well, look up here. Number 2, interest receivable, interest revenue. That's your adjustment. And now you're just receiving the cash and the receivable is going away. So it's recording the receipt. Record the receipt of an accrued revenue because you're going to receive interest. So that means you're owed this revenue. So an accrued revenue. So I think it's letter F. Okay. Rent expense, prepaid rent. So this is a deferral because you already paid the rent. It's going away and the expense is going up. So this is a deferred expense. We got one called deferred expense. Record receipt. To record this period's use of a prepaid expense. Sounds like G. So G, you've used up part of that prepaid expense. Interest expense, interest payable. You owe. This is saying, hey, we owe interest. So, but no money's changed hands. You're recording the fact that it's an accrued expense. So that's letter E. It's got to be letter E. Where's E? All right, there you are. Unearned professional fees earned. So you got money in the past and you had a liability and now you've earned it. So let's see. To record this period's earnings of prior unearned revenue. Yeah, looks like B. Okay. Unearned professional fees. No, I'm sorry. This is depreciation expense. No, this one's got to be B. I'm sorry. I must have skipped that one. Depreciation expense accumulated. You've already paid for your computer. So this is a deferred expense. So let's see what it is. Which one is it? To record this period's use of a prepaid. That's what it's got to be. It's G. You already bought the equipment. Now you get to recover it through depreciation. Insurance prepaid. So you already paid this. So to record this period's use of a prepaid expense. You've already paid the insurance in advance, and now it becomes an expense. Salaries payable cash. This is where you're paying. You put on there that you owed an accrued expense, and now you're paying it. To record the payment of accrued expense. That's letter C. You're paying somebody you owed money to. You owed, which is an accrued expense, and now you're paying it. Prepaid rent cash. Prepaid rent cash. This is where you're just paying your rent in advance right now today. So this is a deferred expense. Let's see, record receipt, payment of accrued, to record receipt, to record payment of a prepaid. There it is, letter H. And we went pretty fast, so let's see how we did. What's the matter with depreciation? Okay, it doesn't like cash, interest receivable. Interest receivable, interest revenue, that's my adjustment. Now I'm receiving it, and that's letter F. To record, now it's not accrued revenue, so we're getting payment. And accrued, so we're getting, I think it should be D. To record receipt of an accrued revenue. Okay, this is, okay. And what about this one? What didn't it like about this? You didn't like G? Oh, it should be I. Look what I did. It says right there, depreciation. So this should be I, and this should be an accrued revenue. So let's just check. Let's try this one more time. Cash, interest, revenue. Oh, I had F, and it doesn't like it, huh? And here I put H. Well, let's see. Huh. So this should be, is this I, according to depreciation? And let's see, it didn't like this. Cash and interest receivable. To record receipt of an accrued revenue. Interest receivable, interest revenue, now you receive it. So it seems like it should be D. We got cash, interest receivable, let's try D. Check my work one more time. Okay, finally. Okay, and let's see, is 16 real bad? Let's check that. I'm sorry this thing's lasting so long. All right, so to be honest with you, this is like the classification. Prepaid rent, 2 months, current asset, salaries payable, current liability, Inventory, you expect to get rid of it in a year. Current asset, current portion of long-term debt, that's the current liability. Current portion means in the next 12 months. If it's due within 12 months or less, so the time frame for current assets and current liabilities is 1 year. Unearned service revenue. Unearned service revenue. That's a liability. You owe somebody a liability. Accounts receivable. You're going to receive. That's a current asset. Accounts payable. It's a liability. You have a liability to somebody. Short-term investments. That's a current asset. Taxes payable due in 5 weeks. So it's a current liability. Now, what's longer? Well, goodwill lasts longer. That's a long-term asset, right? It's an intangible. Supplies, office supplies, these are all current assets. Franchises, well, that's an intangible. I'm going to say store supplies, that's short term. Copyrights, that's an intangible. Prepaid expires in 5 minutes, that's a current asset. Trademark, that's an intangible, long term. Cash is an asset. Patents are an intangible. So let's see if it liked those things. We did. Short-term note receivable. Oh, see, it's a short-term asset. I'm sorry. So everything we did is right. Okay, we're going to stop here. I hope this helps you finish up chapter 3. And thank you all very much. Sorry this one's so long.